hopefully it'll help you out. So this is our fourth in a series of educational seminars on builder's risk. Just to recap a little bit, we've covered evaluation, construction classifications, catastrophic capacity, and today we're going to talk about, we'll call it policy types, policy forms, or ways of reporting inventory. And just to give you a sneak peek of next month's, we're going to do the hidden cost of builder's risk, of selling builder's risk. So we'll talk about that next time. Hang with us just a second. We're trying to get the screen. Something's happened with the screen sharing.
I gotta stop this.
All right, we're back up and running. Sorry for the delay. So really another way of looking at this today, what we're going to talk about is how do we properly cover inventory or builder's risk for a builder or a developer that's needs this coverage. And we're going to really simplify this. It's not complicated, but I think there's major ramifications for making sure we have proper coverage in place. The first one is, we'll call it a per project policy or a single shot, one shot. I've heard different terms used for that, but so we'll cover that one. That's the traditional way of writing policies, basically a policy per project. The next one we'll cover is the reporting form policy, which has been around a while in builder's risk. And I will say there's some nuances there that you have to be very careful of. And the last way of reporting inventory is really a blanket policy, or I've heard it referred to as a deposit premium, or sometimes I've heard it referred to as annual reporting. So we'll cover these three types in detail, and we will give you the pros and cons of each type. Per project policy, like I said, single shot, one shot policy. It's a policy issued for one project at a time. Sometimes you can have one or two building structures on the same policy, but that's usually the limitation. So try to think of, for every building being built, there's an individual policy, an individual limit, individual deductible. It stands on its own. Each policy stands on its own. These policies are written for a specific time period. Could be 3 months, 6 months, 9 months, 12 months. Sometimes builder's risk on larger projects is written, I've seen it done for up to 3 years. But it has a specific time period. So it's the traditional way of writing builder's risk. The second thing we'll talk about a little bit today is the reporting form policy. And a lot of you other lines of business use reporting forms. I've seen them in workers' compensation. A lot of times they report their payrolls and pay monthly. It's pretty similar in builder's risk. So usually the criteria for a builder to fit a reporting form, the first criteria is they have to have been built homogeneous exposure units, which means they're building single family homes within a certain value range in a certain territory. It has to be the same thing over and over again. If there's wide fluctuations in where they're building or what they're building, it doesn't really fit the reporting form. And we'll get into that in a little while. There are various options within a reporting form. We're just going to cover a few of them today because you could spend all day talking about all the different things that are available in the marketplace. But annual rate with monthly reporting, monthly rate with monthly reporting, those are two options. I'll explain those as we get into it today. As far as when do you report the frequency, monthly, I mean, I've seen it everywhere from monthly, quarterly, semi-annually, up to obviously annual reporting. And the other thing is you don't want to, if someone's only going to build a few structures throughout the course of a year, it doesn't make sense to put them on a reporting form because there is more processing workflow, for, more time for the agent and for the carrier. So each carrier has a different limitation, but there is some number out there, 5, 10, 20, whatever it may be, before they'll offer a reporting form. The last one we're going to talk about is the blanket policy. This is a little different than what some people consider a blanket limit on a property form. So we're talking about builder's risk today, and we're talking about a blanket policy, not a blanket limit, which means basically you're going to estimate how many structures and the value of these structures they're going to build in the next 12 months, and you're going to pay a premium based on that estimate. Then anything they do throughout that 12 months that fits the criteria that you put in there would be covered automatically. And at the end of the 12-month period, an audit would be performed. And obviously at that point, there would either be a return premium or additional premium, depending on what they actually built. So it's a good fit for the large builders because a lot of times they don't want to report every month. It would be too cumbersome to issue individual policies for every project. So the blanket policy is a good option. I'm just going to point out some of the pros and cons now of each one of these ways of reporting inventory. So let's talk about the per project, back to the beginning. So what this does is it's going to pretty much guarantee that you have the right, as long as you've paid attention to our evaluation discussion last month, if the policy is written for the right amount, we know we have that amount of coverage on that structure. There's an address listed, 123 Main Street. You have $1 million coverage. You're off and set. You're ready to go. Okay. It's a specific location, so it makes it much easier to adjust a claim. If there's a claim, it's reported. Fire occurred at 123 Main Street. Adjuster goes out, adjusts the claim, and we're off and running. It's the easiest to explain to an insured. You have a policy, you have a building being built. Makes sense. It's very logical. Some of the cons for this, the things that make it a little maybe not as good, you have to issue a policy for every location. Because if you don't, there's no coverage. And the builder must communicate each time they start a new structure, or the developer, whomever your insured is. So there is a communication there. They have to let you know in order to have coverage. So I still will say it is the most prevalent of all these. And so we'll talk a little bit more about it, but it is a good way to write coverage per project. Reporting form. Sometimes I hear, well, the builder has always been on a reporting form. It's been that way for years. They're comfortable with the reporting form concept and the process. So that's where they want to stay. All right, fair enough, if that's what they understand. It is good from the standpoint of new starts are automatically covered, usually for up to the next month, which that means anything they started in June, they have automatic coverage until the end of July before they have to report those starts. So it gives them a little leeway in when they have to tell the carrier that they've actually started a new project. So that's a pro on the reporting form standpoint. I guess it would help retention because theoretically there's not an expiration date. It just goes on and on and on. So it kind of makes the, ties the builder to you long term. So that's a pro, and they're just kind of used to the reporting process. On the con side, which we got to be very careful here, it can be very difficult to explain to a builder. Number one, if they've never done it before, you have to explain to them that if you don't report within the set amount, in the set time period, you run the risk of no coverage, an uncovered claim. The reporting responsibility is placed solely on the builder. So you've taken the responsibility and made it the builder's responsibility to report not only on time, but the correct value. So that's a big emphasis to put on the big exposure to put on the builder. I have seen uncovered claims many times because they forgot to report. And you guys all know that if the builder forgot to report, he's going to blame you, even though you had nothing to do with it. The agent gets blamed. And I have seen some E&O claims arising out of the use of reporting forms. Sometimes there's very strict underwriting guidelines embedded into the reporting form process. For example, it'll say you can report except the following coastal counties are not eligible. So if they build in a coastal county, that would not be covered. Or usually there's a value restriction. You can report up to $1 million in value. If it goes over $1 million, you cannot report that. I've seen protection class. You can report as long as it's protected in 1 to 8 ISO protection class. 9 and 10, you cannot report. So keep in mind, sometimes the builders get confused and try to report something that's not eligible. Could result in another uncovered claim. The blanket policy, interesting way of doing it. It's a low touch, automatic coverage. Sometimes it's done for a year time period. That's usually what it's done for. That's common. One of the biggest pros of this is new projects are automatically covered. They don't have to report to anybody. They don't have to call anybody. There's coverage in place automatically for those new starts. So then that's probably the biggest pro. The big builder is saying, I don't want to have to report every month or even quarterly. I don't want to. So if they don't, then it's worth it. It's a great way to do it. Once again, some of the same cons for blanket apply to reporting form. One would be underwriting guidelines. Keep in mind, they think they have coverage, but if they happen to build a commercial building and they didn't tell anybody, they might not have coverage. Or if they happen to build one that happens to be in protection class 10 and they didn't tell anybody, theoretically they could have no coverage. And the other biggest con to a blanket policy is just what I know a lot of you have been involved in, is an audit. So now you're going to go back and tell the builder, remember those projects you have that are now completed, you owe more money on those now. And they're going to go, wait a second, I don't understand that. Coverage is not in place anymore, but it was in place when they built the project. So just the whole audit process sometimes can create negative feelings. And I know you've all been involved in those type of audits before. Just a few tips before we get into the question and answer period. A few tips along the inventory controls would be every carrier is different. That's why this is more of an educational series. We're not trying to push one carrier over another, just trying to explain to you the ramifications of these things. And these carriers are all over the place. I've seen many different versions of what we talked about today. What I would do is the big thing is communicating to the builder when you first write the account. You need to explain to them what this means by, if you have individual policies for individual structures, that's pretty easy. That's the easiest one to explain. So, understand a carrier's capacity concerns. A lot of times that's what drives how they insure property, which means a lot of times they don't want to write a blanket policy in a coastal area because at any given time they wouldn't know what their exposures are. So I mean, sometimes that's what drives the availability of blanket to begin with. Make sure a builder understands different construction classifications. If they're building the same thing over and over again and it's a frame single family dwelling, there's no problem. We do have a lot of builders that will build some JM, they'll build some frame. They might even build a non-combustible building once in a while. That's when you can run into problems because they have different construction types. Same thing with protection class. I mean, the builder doesn't know what a protection class is. So you need to explain to them, if you build one out away from the developed areas, it might be a 9 or a 10, and you might not have coverage, so give me a call. That's all you're saying to them. And I would say the other thing is make sure you have a complete understanding of what the policy says. Work that out with your underwriter. And good advice would be always to communicate with the underwriter by email back and forth. And then you always have proof of what you agreed to. So both from the agent's perspective and the carrier's perspective. So hopefully this is helping you out here. What I would like to do now is to open it up to questions. And any questions you have relative to builder's risk and reporting of inventory, which is a very important aspect of builder's risk. Any questions?
All right, Jeff, one question that came in. What if the project isn't complete within the time period predicted? Can it just be extended?
All right, I'll be a true politician here. I will say it depends, but because every carrier and each underwriters within a carrier's program can be different. But yes, it can be extended. Sometimes they'll renew it for another year. Sometimes they'll just extend it for 3 months at a time or a period at a time. It just depends on the flexibility of the carrier. But yes, it can be extended.
Okay. Second question, what do you do with existing inventory?
So here's another interesting thing about blanket policies or even reporting form policies would be, let's say you have a builder, an ongoing building concern, they're building 50 houses a year, and for whatever reason, they decided they want to move. They're not happy with their coverage form. They're not happy with their agent. I don't know, could be anything. So now they want to move their business. Well, there's 15 houses that are in some state of completion. Some might be 100% complete. Some might be 10% complete. Well, they want to move that existing inventory. The first thing I would point out to the insured is they've already paid the premium to their current carrier on those starts. So sometimes they'll say, so they could just leave them there and just start putting the new starts with the new carrier. That's a clean way of doing it. Sometimes they say, I don't care, I want to move everything now. So then you have to work a deal with the new carrier to make sure they understand that they're taking inventory that's already under construction. And you will pay a premium up front on those projects that are under construction. So I guess the answer is you need to work out the details with your underwriter because it can be handled differently.
Okay, we have quite a few questions just come in. First one, are these forms available for owners that subcontract the construction to a licensed contractor?
Yeah, I'm sorry, Joe, would you run that by me again? Kind of broke up there.
Are these forms available for owners that subcontract the construction to a licensed contractor?
Yeah, I mean, I would say an owner that's going to be the insured, which is fine for most builders as carriers, would want to do it on a per project basis. I mean, because usually an owner, are they building a bunch of homes? Probably not. They're just building one custom home. So you very rarely see it for an owner done any other way. But theoretically you could, but if as long as they're using one builder to build everything, I could see a problem if there's different builders, you'd have to have different policies. So I guess it just depends. I sound like a politician today. I like that, but.
Okay. Do any of these forms come in at a prorated premium when quoted?
They can. Some companies will only write completed value builder's risk on a fully earned basis. Others will provide it on a pro rata basis, which means write the policy, pay 12 months premium. It only takes 9 months to build the structure. You're going to get 3 months premium back. I will say it would be hard to process and administer pro rata on a reporting form or a blanket basis. I'm not saying it couldn't be done, but it would add a level of complexity. But that truly is up to the underwriting carrier, and I've seen it done both ways, as far as pro rata or fully earned. Something to consider.
Okay. Is the pricing generally more competitive with the reporting form versus the single shot? And if so, by what percentage?
It's more importantly, as opposed to a single shot reporting form or even a blanket, it's going to be based on the size of the project, the size of the total values being built. Case in point, if you got a builder that builds 5 homes a year, he's going to get a rate of X. If he builds 50 homes a year, his rate's going to be much less, and it kind of goes up the scale. The more homes you build, the lower rate per 100 you're going to get. So it's really not, single shot reporting form blanket. It's the size of the account will tell you how much the rate per 100 is. So volume discount, I guess, is applied in builder's risk.
Okay, can policies be written for 24 months right from the start, or are they extended until the project is completed?
Great question. So once again, every carrier has a different appetite. Personally, I would always want to write it for the correct period of time, whatever that may be. So if you have a large commercial project and it's going to take 24 months to build it, then write a 24-month policy. Because what I've seen happen, not to pick on some of the other carriers out there, they'll write a 12-month policy, and then when it expires, you go to renew it, and they want to double the rate. So if you have a 24-month policy, you have guaranteed rate, guaranteed coverage for the full length of the project. So I would always try to write the policy for the true estimated length of that project. Now if you think it's going to be a year and it ends up being 15 months, so you got to extend it 3 months, that's okay. But try to get it as close as you can. That's my advice.
Is it necessary for both the homeowner and builder to obtain separate builder's risk policies for the same project?
No. Only what I would advise is either entity is the named insured or the other one is an additional insured, just so everybody's interest is protected. But one policy would suffice. And, from a coverage standpoint, it really, an underwriter they don't care whether it's the owner or the builder. If the owner is the named insured, most carriers are still going to want the basic underwriting questions answered for the builder because they want to make sure who's ever building the house knows what they're doing.
Does the homeowner always have to add the builder to their policy as an additional interest?
Yeah, I guess technically no. There's no cost to adding them, so I would probably do it just out of paper, making sure all bases are covered. But they wouldn't have to. I mean, if they're only concerned about their interest and not the builders, that's their prerogative. The underwriting carrier is still going to want the information on the builder, though. Length of time in business, make sure they know what they're doing. So.
Okay, that was the last question.
Whew, that's a good group of questions. I like that. So in close,
I take it back. One more just came in. Does a builder's risk policy ever include GL?
It's a separate line of business. Builder's risk is inland marine. Most times stands by itself because general liability, for example, for a 100% general contractor subbed out paper is very hard to find a market for that. And so I would say, no, it usually stands on its own. Builder's risk is a monoline coverage for the most part. Is that it?
That is it. You're good to go.
Fantastic. So in closing, I'd like to thank you for your time today. I think we got you through this pretty quick. Like I said, this was the 4th in our series, educational series. Hidden costs of selling builder's risk is coming up next. But we really do appreciate your time. If you have any more questions, these webinars are recorded. They're on our website. Come check it out anytime. Myself and Donna are available. So if you guys ever want to talk builder's risk, that's pretty much what we do all day long. So we love talking about it, as you can see. So we hope, hopefully this helped you out, and you guys have a great day. Look forward to talking to you soon.